Welcome back to Generational Sense, where my dad and I talk about generational finance topics and investing and all the good stuff with building generational wealth. Today we're going to be going over just a few questions I have when it comes to filing taxes with a W-2. Maybe you've got your first job or you've got your first paycheck and now you're worried about taxes or why amount money was taken off of your check. And so we're going to kind of be digging in a little bit deeper into that today, and just kind of giving you a small overview as tax season's coming up relatively soon. And yeah, so I'm excited to talk about that. But Dad, do you have just maybe a basic overview of what is a W-2 and why is your employer sending that over to you as tax season gets closer?
Sure. So, Nate, the W-2 is the form that reports your income from wages that you earn. And in other words, compensation. Because not only wages, but tips and other compensation you might receive from an employer are going to be put on a W-2. So you might get bonuses. You might get other things like that. Now, there are things that will not go on a W-2, like stock options and fancy things like that. And we're not going to cover those types of issues today, I don't think, at least. So, just talking basics, though, that's what the W-2 is. And a lot of people in this world, in this country, they have one job and they get one W-2. And hopefully they're starting to invest but they may not even have a taxable investment account. All of their investing may be in a retirement account, 401k or an IRA. And if that's the case, there won't be any taxes on that, so they won't necessarily get anything that has to be reported too much to the IRS. And so there are going to be a lot of people in the W-2 boat where that's what they've got.
Right.
And that's what they report. And that's what they pay taxes on, is that income.
Yeah. So if say I started a new job this year, it's my first job, straight out of high school or something of that sort, what do I need to do to make sure that W-2 is taken care of for my employer to send it over, or is there any information that I need to do before I have that in my hands?
Employers are required by law to get you on that first day of work, usually, unless there's some very strange circumstances, to fill out what's called a W-4 form. The W-4 forms the basis for the way your W-2 is handled. That's where you basically declare what your Social Security number is, what your name is, and then you also do some things on there to determine how much money is going to be withheld from your check every week or month, or however often you're paid. And those are the things, those little boxes are the ones that sometimes trip people up. Most people know their name and where they live and what their Social Security number is.
Right.
If you don't know that, you might want to go back to the drawing board just a little bit and go create a document where you keep things like your name and your address and your Social Security number.
Yeah.
And you might need that handy. But let's assume our audience, they've gotten that far. So now they're worried about those boxes and things that are on that form.
Yeah. Well, let's get into that a little bit. When it comes to tax withholding, you mentioned, that's a pretty new topic to me because generally either I didn't really have enough on my paycheck to really consider just, automatically asking for money to not, come to my checking account or even knowing what that is. Could you explain maybe tax withholding a little bit and, where that comes into play with your W-2?
Yeah, I like the idea of us talking about that for a moment because that's that first day of work. That's where it begins. And then we can come back to the W-2 because that's more tax time. And when you're worried about filing, hopefully getting a little bit of a refund, but not too much, not having to pay any taxes.
Right.
And so whether or not you're going to pay taxes could very well be determined by how you fill out that W-4 form. Because on that form, you're going to provide information about yourself that includes your number of allowances or exemptions that you claim. And so those are based on things like your your spouse and whether or not she wants to claim herself on her W-4 form. Or even if she does, you could still claim her, or she, them. The thing about that W-4 form is that there's, a lot of times it's intimidating, but other than your name, Social Security, and information that has to be accurate like that, when you go to make your elections about number of allowances and exemptions, what you put in those boxes is really up to you. Mm-hmm. You could mess yourself up by not claiming or by claiming too much, and then you end up getting a huge refund. Or you can mess yourself up by not claiming any when you should be, and getting a situation where you owe a lot of taxes. So
Yeah.
I think I said that backwards. If you claim a lot of allowances, that's going to cause less money to be withheld. And so in that case, you might end up owing taxes. If you don't claim any, then more money will be withheld because the IRS is going to get this form. Your employer is going to take this form and base your withholding on it. And if you don't claim allowances or exemptions, then you're telling your employer that you don't have any tax credits or deductions that are going to be made at tax time because of those allowances, and so therefore your taxes will be higher.
Right.
And therefore you may end up with a big refund if you didn't claim any. And sometimes people do that intentionally. They leave that number lower than maybe they could so that a little bit more money is taken out so that they don't accidentally end up owing the IRS money. Any good financial advisor and planner is going to tell you want that to be close to zero.
Yeah.
You don't want to get a huge refund because that means the government got to use your money for a period of time in which you could have had it at the very least in a savings account making a little bit of interest.
Right. So I was about to ask because I was curious kind of how you put that, you know, the cons of getting a big refund are interesting to me. I guess could you break that down a little bit more because I haven't really heard that side of it very much. Generally you think, okay, I got a good refund, good, I'm getting a lot more money back, but also you kind of mentioned it's great on the sense of good you're getting money back, but at the same time you're missing out because you could have had that money growing for you if it wasn't already given, So
it's a relief.
You're losing time there, I guess.
It's a relief if you're worried about the alternative where you're worried about owing taxes and you don't have any money saved up and that kind of thing. Then yeah, it's a nice relief. But again, when you're thinking about financial planning, you want to do a better job than that.
Right.
You want to fairly accurately, if possible, hit the target of withholding what you really should be withholding so that the IRS gets what they're going to get in a timely fashion and you don't get a situation where you're having to file an extension to come up with money or anything like that. But at the same time, you're messing with your own budget because you've lowered your paycheck, which means you may have a harder time meeting your own goals. And one of your goals should be, putting aside 10, 15, 20, 25% of your wages that you're reporting on that W-2. You want a portion of that to go into accounts for your future and to start investing and saving and things. And so you're impacting your ability to do that regularly, which is the best way to save, is to pay yourself first month after month after month.
Right.
If you wait and get that big tax refund, then it requires a lot of discipline to divvy that up. Plus, you've lost anywhere from a few months to close to a year of time in which you could have been using that money more effectively.
Yeah, it's interesting. Like I said, I haven't heard that take before, but it makes a lot of sense because
the only people who ever look for a big refund and try to do things in a way are generally financially naive or simply unwilling to do good long-term financial planning, and what they're really planning is to live paycheck to paycheck for the rest of their life.
Right.
And their only way of ever getting a lump sum of cash is not through saving, not through investing, not through planning for the future, but through tricking themselves by getting a big tax refund. And then they're planning to spend it, I guarantee you.
Right.
That's their strategy.
They've already got plans for that refund.
Yeah, then they've got plans for it, baby.
Right.
No.
Interesting. So how much would you generally, maybe percentage wise, because people could have fluctuating income or, of course, different amounts of incomes that come into play with their taxes. But what maybe percentage would you generally say is probably a good idea to withhold?
Well, that's the thing. You don't have to figure that out generally. If
Okay.
you're simply working a job and getting a W-2, unlike myself where I have 3 jobs and get 1099s and things like that. So I have to really sit down and crunch some numbers and think about doing extra withholding, paying
Right.
quarterly estimated payments to the IRS. But that's another topic.
Yeah.
I think let's talk about that W-4 form a little bit more. When you fill it out, one of your best bets, at least your first year working, is to just be accurate. Put the right number of exemptions, the right number of allowances, read the fine print on the second page of the form about what those things mean, and put the correct number, because the whole purpose of that W-4 form is to accurately estimate what your withholding should be, and then for your employer to send that to the IRS.
Right.
I'd say, first year, start there. Otherwise, you need to sit down with an accountant, CPA, or study yourself how it all works and crunch some numbers, do some math. And if you're doing all of that, you're probably already bored out of your mind on this podcast episode, and you just love listening to Brian Bellamy and Nate Bellamy talk about father and son finances. But I think that just fill it out accurately is the best bet for the
Okay.
first year. Now, what happens if you get a big refund? Then you go in and you make some small adjustments on that W-4. And that's probably a good point to make here is you can always go back to your employer at the beginning of the year and say, hey, I want to adjust my withholding for this year. And you give them a new W-4 form, and they enter that into their accounting system for their payroll, and that'll cause your paycheck to change a little bit. If you remove allowances and exemptions, then you're going to get a bigger paycheck,
Yeah.
which
Okay.
means less money is being sent to the IRS. That's why your paycheck goes up, other than if you
Right.
got a giant raise.
So I guess let's move into the actual filing. So we've understood, why some of the money's taken out, maybe by you or that decision. Say you get your W-2 and you're getting ready to file, but you notice a few things. Maybe you see an error on the W-2. Maybe your social security is wrong or your last name's wrong or something like that. What sort of steps should you take in order to make sure that you're getting those corrected?
If you see an error on your W-2, you want to report it to your employer immediately, and they will get it corrected because they have a requirement to. And they'll file with the IRS an amended W-2 form and upload whatever other electronic documents they're required to. I found out this year that our accountants for our law firm upload a Georgia form, and on that Georgia form, our accountants had actually left off the last digit of my social security number. So I did not get
No.
credit for my W-2 income and withholding. Well, they gave me credit for my income because I put that on my Georgia, 1040 type form that we filed.
Yeah.
So they didn't argue with my income, but they argued with my withholding because they never got my W-2 showing the withholding that my employer had done. And so they sent me a big audit and a nice size tax bill. And I have appealed that and we're waiting the results. So yeah, that's why it's important. You want
Yeah.
to file an amended, you don't do it. Your
Right.
employer files the amended W-2. The only
Okay.
thing you're going to have to file in all of this process, assuming that, you're filing a simple return and you have the W-2 form and that's about it. The only thing you're going to need to worry about filing is your taxes,
Mm-hmm.
which starting this year, the IRS lets you do for free on their website. So that's cool.
And
If you've got
that's
a
what I,
simple enough return. And if you don't, then
yeah.
they'll let you know and they'll punch you and you'll have to go get TurboTax or go see an accountant.
Yeah. So let's get into that a little bit. So I am filing first time. So You're saying the IRS now allows you to do that for free instead of using TurboTax and H&R Block or even hiring an accountant necessarily. You're able to kind of do that a different way now.
It is called IRS Free File.
Interesting.
Pop that in Google. It'll take you to irs.gov. Make sure that's where you are. And it should take you to the page that shows you how to do their guided tax filing. And I would think that you, being your first job, being young, having a lot of complicated circumstances in your life, and and most people, maybe not most, but lots and lots of people are going to be able to use that system.
Very interesting. So, what kind of extent should you be looking at when considering maybe mine is too complicated, or maybe you've gotten a punchback saying that it is too complicated? Should I start considering getting an accountant or CPA, or is it really just sitting down and really looking at what's going on?
Yeah, well, I know for some people, even the free file is going to be a bit much. And because any kind of number crunching, looking at forms and understanding the fields on those forms, if that's hard for you, then feel free to go use a service locally. You'll find some free, some paid. Churches, libraries often have free help. If that doesn't work for you, you can always go somewhere that's marketing their services to you, and they oftentimes let you pay them out of your refund. I don't love the idea of you paying for your simple return.
Right.
You do have a simple one, but again, for some folks, it's worth it to get the help. You definitely don't want to forego filing, and you don't want to file in a way that you don't understand what's happening. If you do understand, then I think TurboTax is a good way to go for a lot of people, or the H&R Block software. I think it's called Tax Cut. Yeah, I think the IRS even has another version, maybe where you file and pay a little fee. I think there's one other major competitor out there to the H&R Block and the Intuit products.
Yeah.
Don't hold me to that. It's been a while since I looked. But my personal taxes are fairly complicated, and I've been using TurboTax for years. I'm just now at the point where I'm thinking about using an accountant. But I have a business partner who's been using an accountant for years because he doesn't want to have to sit down and spend the 4 or 5 hours going through it all and make sure you've got all the documentation and put it all in correctly, and worry about making a mistake or claiming something you shouldn't claim, or not taking a deduction you should have taken. And so when you get to that point where you're worried about, did I do it right? And that's going to be different for different people. It really is, based on their background, their what they're comfortable with.
Let's talk about filing on time. So I know the big tax day everybody knows is April 15th generally. And I know you mentioned to me a while back something about actually filing quarterly in that sense. Could you kind of break that down and when that comes into play, whether that's just for businesses or, what I should be keeping an eye on there to make sure everything's in on time?
Sure. So this year it is April 15th. That can vary. Some years it can be the 16th or something, even the 17th, depending on when April 15th falls. If it falls on a day that the federal government offices are closed, then they move it to the next day or the next day.
Right.
Because the federal government has to be open for business on tax day.
Of course.
So that's something to note. This year it's on the 15th, though. And so let's say you're not ready on the 15th, but you've got a good idea of what you'll owe the IRS. So you can file an extension and pay whatever you think you're going to owe to both the IRS and your state and not incur any penalties. If you can get basically a free pass until October 15th to file your taxes. If you file the extension and don't pay enough to cover whatever taxes you're going to owe, you will end up owing some penalty and interest. It's not terrible. Depends on how much you owe. The more you owe, the more the penalty and interest will be.
Okay. So,
don't freak out if you're going to not be ready on the 15th. File that extension. If you are able to calculate what you think you'll owe, it's more just a matter of not being able to get the forms filled out. Then print out the form for sending them a payment, and the address is on there and everything. and send them a payment. I think now you can even do that electronically. You just have to register with the IRS to have an account to do that. And they're pretty insistent nowadays that everybody do that. And they use robust security for everyone. So don't feel like you shouldn't do that.
Yeah. Okay. I guess kind of a final question to break down, whether you've got a W-2 or first time filing taxes, things like that. I know we mentioned a little bit when it comes to withholding and what, money you've got from that refund or what you could have had in your account from not getting as big of a refund. But how could we utilize W-2s in order to build wealth? If there is a way to do it strategically to make sure that you are, having enough money in your account versus getting in that refund, or maybe if there's any other examples that you might have of how could we use it to build wealth and be strategic with it.
Okay. Well, one thing you definitely want to do is take advantage of any retirement accounts offered at work that, especially if they offer matching. If you have a 401k or 403b or a simple IRA at work and they offer a match, for instance, a simple IRA, I think the minimum is 2% match or 1% match. Oftentimes it'll be 3% or more. I think the maximum is 3%. So take that 3% match. That means you're saving, in essence, 6% of your salary. That will be reported on your W-2.
Mm-hmm.
Sometimes those are even deducted from your salary so that you don't pay taxes on what was withheld. That would be a traditional 401 or a traditional simple IRA. So, for example, the simple IRA, that's what's called an above-the-line deduction, meaning you don't even pay Social Security or Medicare on it, which adds a nice little bonus to your paycheck because then you're not paying that 6.2% that you take out for Social Security on that
Right.
amount that you're saving through that simple IRA, and you're also not paying that other bit, 1.45%, that is withheld from your paycheck amount from your wages. Because it's above the line, it means your gross wages are actually being reduced.
Yeah.
That's not true of every type of retirement plan, but it's something to take into consideration. So as far as building wealth, taking advantage of those plans. The other thing to do is to just know your W-2 in the sense of knowing what your salary is and then creating a budget like we talked about last week where you pay
Mm-hmm.
yourself first. And if you don't have a retirement plan at work, definitely take advantage of the Roth IRA and have
Absolutely.
some money taken out of your paycheck and directly sent if possible. If not, have it taken directly out of your checking account and directly sent to that Roth IRA account that you set up with Vanguard or Fidelity or Schwab, one of those really great companies to have that type of account at.
Yeah. Absolutely.
Otherwise, the W-2 in and of itself is not a wealth builder.
Right.
It's a
Right. Yeah.
document for reporting your wages and your income from your compensation to the IRS so that they can take wealth away from you in the form of
Right.
taxes.
Yep. Good old Texas. Okay. I guess, do you have any final maybe thoughts that maybe we didn't go over today when it comes to, the general tax filing process or U2s maybe that could be a good maybe tip before we get into the tax season here?
Well, just, if you're new to the work world, be aware of taxes. When you get that offer and you're thinking about taking that job, take into account the fact that over 6% Social Security is going to be withheld from that. So that immediately, let's say you're going to earn $60,000 a year. Well, that's $3,720 taken away from your paycheck every year. And then
Right.
Medicare, that's on that $60,000 a year job, that's going to be another $870. So now you're down to around $54,000 instead of $60,000. Then on
Right.
top of that, you're going to have maybe taxes, depending on your number of allowances, number of exemptions, and things like that, that are going to also be withheld and that you may owe for your tax bracket.
Yeah.
Tax brackets are progressive, meaning that folks that are, on the lower end of earnings pay a lower rate of income tax, and people earning a lot more pay a higher rate, up to 35%. And that's in addition to the Social Security and the Medicare. The Social Security has a cap. You only pay that 6.2% up to this year, $168,600. And then any earnings above that, it's a good problem to have. But any earnings above that, you don't pay Social Security tax. You do pay Medicare tax though, and in fact, if you earn enough,
Okay.
about $200,000, you actually pay an extra Medicare tax, and so
Interesting.
they still get you for that, regardless of how high those earnings go.
Huh. Okay.
So that's something to think about if you're new to the workplace. Is as you're planning your budget, as you're planning your life, you're getting that new apartment, maybe because you've moved, taken a new job. You need to be very realistic about taxes.
Right.
And don't forget the state you're in. Look up and understand what that rate is, where the rates change if they do, if they're progressive, what and how that's going to impact your bottom line as well. State
Yeah.
tax rates are not as bad as federal, but in some states they can still be significant.
Yeah. No, absolutely. It's always interesting to see both of the numbers kind of there and putting them together and how different they are, but at the same time they're both taking the money. So, well, that's all I had today for kind of talking about just, first time going into taxes and, having that first job, getting that first W-2, what kind of things to be looking for, as you're filling out that W-4. But I really appreciate you talking with me today and kind of breaking that down for me as, we are getting closer to tax season and, what to really be considering. So, thank you all for listening today to episode 3 of Generational Sense, and looking forward to next week talking some more.
I enjoyed talking some sense with you, and I'm always excited to get to do
Absolutely.
that. I wish we all fathers, mothers would share financial sense with young folks so that they can be more successful early on in their lives.